Have you heard that the Department of Housing and Urban Development in the U.S. recently approved the maximum term of a 30-year house mortgage plan to 40 years? That's right, folks. What does it mean for first-time homebuyers? Is it good, or is it yet another tidal wave in the housing market? Let's discuss all of it in this video. As you might have heard, the most concerning news for the U.S. population is the banking crisis right now. The shuttering of Silicon Valley Bank and Signature Bank has shocked the nation. To be worried about it is only natural because the events of the Great Recession of the late 2000s aren't too old, and people have heard many speculations and even seen some evidence that prove we are headed toward a disastrous situation. This banking crisis is another problematic event that's stirring up people's emotions about their money because it's exactly what happened back then. The 2008 financial crisis was a devastating event that shook the global economy. At the heart of the crisis were the banks, which had taken on enormous amounts of risk in the years leading up to the crash. Banks were lending out large sums of money to people who could not afford to pay it back in the form of subprime mortgages. When housing prices began to decline, many people found themselves unable to pay their mortgages, and the value of these financial products began to plummet. As a result, banks found themselves holding on to vast amounts of worthless assets, and many of them became insolvent, like Lehman Brothers and others like Merrill Lynch, AIG, Freddie Mac, Fannie Mae, HBOS, Royal Bank of Scotland, Bradford and Bingley, Fortis, Hypo Alliance, and Leicester came too close to a similar fate and had to be rescued. So all the worried emotions are fair, and to be honest, we are desperately hoping the government steps in firmly to stop this from repeating again, which they are actually stepping in to do. We're hearing about another bailout that will, according to them, not affect the taxpayer at all. It means that they will take care of all the depositors' money. On the other hand, Fed has been trying to bring the rising inflation under control by hiking the interest rate since last year and hasn't thought of stopping anytime soon. It's also come under a lot of pressure not to go forward with another hike, which is due next week, and is believed to be a 0.25 percentage point increase in light of this market turmoil. Whatever way the Fed goes, it's bound to face criticism, though. Some experts are saying that the Fed will not go forward with its decision because it may not stabilize the rising inflation, but it will surely destabilize the economy. So it's basically a matter of what they should do and what they will do. If they don't increase the rates, the slowing economy is likely to bring the yearly inflation rate down around 4% by the end of this year. But is it the desirable target? Well, no, the Fed wants it to be at 2 to 2.5%. For that, we will have to wait and see in the coming week. The stock market isn't doing so well too and has been volatile this past week. All of this is due to economic and policy factors, interest rate hikes, and the Fed's current monetary policy. So what does it mean for the housing market? Now, on the 8th of March, HUD announced that they are extending the maximum term of the FHA loan from 30 to 40 years. It's going to be effective later in May this year. Why they've made this decision is to facilitate the already defaulted loan payers who have sadly become unable to pay the remaining balance of their house loans. The defaulted borrower will have a chance to modify their payment plan and take their remaining mortgage loan balance and recast it into that 40-year time period. It may seem like a friendly decision in favor of the borrower, but come to think of it, when people take house loans to pay back over a time of 30 years, it's already a long time. And by the time they're done with all their payments for, let's say, a $300,000 house, they've already paid 3 times that amount. A whole generation grows up in that time. A family who took a loan 30 years ago and had 2 kids at that time, now those kids are grown individuals still paying their mortgage. So to add another 10 years to that, it's just devastating. A 40-year payment plan will suck even more money out of the homeowner's pocket before they can call the house their home. This raises too many questions about whether people will ever get out of their house payments and how much they're actually paying for a house worth $300,000. It's making the real estate market a risky one for investment purposes, and people are thinking 10 times if buying a house in this crazy inflation, high interest rates, and home prices are even worth it or not. So many people are even thinking if the housing market is a good investment zone anymore or not, and if owning a home is still an American dream or not. The recent banking collapse has resulted due to the ongoing struggles of the U.S. technology industry because these banks had ties with the tech industry. These companies are facing issues due to the sharp fall in cryptocurrencies and the soaring sentiment among investors. So many tech companies have already been on a literal firing spree, and just in 2023, more than 121,000 employees have been laid off from tech companies. So as you see, it's all a big interconnected madness where one thing is so heavily dependent on another. Another question that arises is if this banking crash will prolong the housing crash. People, especially the wealthy ones, are at a loss for words and ideas right now. They don't know what to do with their money. These are the people who own large sums of cash sitting in the banks. With the banking situation going south right now, the rich may take out their money from the banks and put it into buying the overly priced houses that are still sitting in the housing market to keep their money safe. Even when the average person is struggling to buy a house, the rich can buy that instead and stop the prices from going down. So to say that this situation may prolong the housing crash won't be wrong. And that's it for today's video. I hope you found this interesting. If you did, please give it a thumbs up and share it with your friends. Also, we'd love to hear your thoughts about the current U.S. housing market situation in the comments section below. And if you haven't already, consider subscribing to our channel so you'll never miss an update. In the end, thanks for watching, and we'll see you at the next one.